Closing costs are additional funds that are due at closing along with your down payment. Closing costs cover a lot of different things. It covers things like the fees associated with getting your mortgage for underwriting and the appraisal. It covers legal costs. An attorney will do the closing, and they'll also perform the title search. They'll issue the title insurance. There's different types of title insurance. There's lender's title insurance, which protects the lender, and there's owner's title insurance, which protects the home buyer. There's also government recording costs. In addition to that, money that's due at closing, which isn't more of a fee, but more of a prepayment of future expenses on the home, include prepaying some property taxes and prepaying your home insurance, which you get to select the home insurance company and work out the final cost with them. And then the first year's premium for that home insurance policy will be due upfront at closing. Also at closing, you prepay interest for the remaining days in that month that you're closing. That's the only time on a mortgage that you'll prepay the interest. And usually when you make a mortgage payment, you're paying the previous month's interest. So the only time you prepay it is at closing. All these fees can vary depending on the type of property you're buying and the price of the home and also the price of the mortgage you're getting. So up front, when you're first getting pre-approved, it's important, depending on what your basic scenario is, to get an estimate in general for what you can expect for costs. That way you can budget that into how much you're putting down for your down payment and just in general, how much you're going to need for closing. There's a few different ways that closing costs can be paid. You can pay them out of your own pocket by bringing cash to closing to pay those expenses. You can also, when you're upfront making an offer on a home, negotiate for the seller to contribute some towards the closing costs, or even all of them. And then also you can finance them into your mortgage amount by talking with your loan officer about options for including those fees in the mortgage. So you don't necessarily have to pay 100% of the cost yourself. It can be split up a few different ways. And the key is knowing what your options are and knowing what to expect so you can properly structure the deal and work with your agent closely to make sure all your needs are being met.